Mortgage rates live with the mortgage calculator. We will wait just a few minutes here to get started, let everybody have a chance to jump on, and give us a chance to go live on all of the different platforms. We did put the chat up on the screen if you want to drop a comment there in the chat as you tune in. Happy Friday, everyone. Hope everyone had a very productive week. Hope everyone has a great weekend. Just wait just a couple of minutes here and we will get into it. Hello, everybody checking in there. Robert, Julio, Samantha, Nick. Looks like some people from LinkedIn tuning in. Appreciate everybody jumping on nice and early. Mark, Adam, Jamie, Jason. Shout out to the Mortgage Calculator team tuning in. And it looks like we are good to go, so we'll go ahead and get started here. Let's take the chat off the screen and we'll get into it. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans, and today's deep dive is one of our specialties, which is 4-unit properties. So we do this show every weekday where we go through the live rates for different mortgage programs, and then we do a deep dive into a topic like we will do today with 4-unit properties. So Jose will go ahead and pull up some quotes and do a deep dive into that. But before we do that, just like we do every morning, let's go ahead and pull up our pricing tool and see what the mortgage rates are today. So, Nick, let's go ahead and see what the market looks like this morning.
All right. Let me go ahead and switch my screen and we'll check it out. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. If you'd like a full loan estimate with the full breakdown, we have over 300 licensed loan officers, and we're licensed in 22 states for primary and second homes. And we can do our business purpose DSCR loans in 44 states, so pretty much all across the US, which will be something I'm sure that Jose talks about here in a minute. Now, this tool will show us the general rates and APRs, including all the costs. But if you'd like a full breakdown of all the different fees and all that great stuff, please get with our team. This will show us the rates today. It is May 12th, just after 11 a.m. Eastern. So our standard programs are live here. So let's set up a basic scenario and compare the programs. We will set the loan amount at $400,000 as we do every morning. We'll set the LTV to 80% loan to value, 20% down payment. We're going to set the price to 99. That means we're going to find the best rate at one discount point in cost. Again, because rates are higher than most people would like. Most requests are for a small buy down, so this is our most common request. We're going to compare conforming conventional loans. Then we'll check out our FHA rates this morning, and then we'll go into expanded guidelines, aka non-QM, where we have over 5,000 other loan programs. VA is only for our eligible veterans, so if you are eligible, we'd be happy to quote it, but not everybody is, so we don't do that live. And as same with USDA, only for eligible properties in a USDA eligible area. So if you are looking for that, please let us know, but we don't quote that live here. So let's check out our conforming conventional to start. We'll do a purchase, 30-year fixed standard loan, primary occupancy, single family home. We're going to do 1 unit. A little bit later, Jose is going to go into all the 4-unit options. So, if we switch this to 4, obviously that's what Jose is going to go into detail with. That does change all the settings, but for all our demos, we'll use 1 as always. State of Florida, County of Miami-Dade, and we'll use an estimated FICO score of 760 for all of our demo quotes and an estimated debt to income ratio of 40 for the demos. So with those basic settings, let's check out the rates this morning. Looks like it went back up just a tad. So yesterday was a good day. Today it went up a tad. I think it might go down a little bit later today as well. So hopefully we stay tuned to the movement here. The best option that comes up though at the top, 6.5 rate for 0.75 discount points and costs, and a final APR of 6.668. So great option there. I believe yesterday we were about 6.5 APR, and hopefully today we see some more downward movement. Now, if for any reason our customer doesn't qualify for conventional or just wants to check out FHA, make sure we compare across the APRs across programs so we can compare apples to apples. Let's go ahead and click back into the quick pricer, set up the same exact scenario, 80% loan to value, everything else set up the same. All we're going to switch here is to FHA so we can quickly compare across the programs. So this looks, I believe, about the same as it was yesterday. 5.625 rate, the best option the computer found for 0.875 discount points and costs, and a final APR of 6.223. So in this scenario, even with the upfront and yearly mortgage insurance that's required for FHA, FHA is actually a little bit cheaper on the APR here than conventional, which is somewhat surprising. So definitely recommend our customers out there shopping for conventional FHA. Don't discount the FHA. Definitely ask for a quote. It might actually be a little bit cheaper. Now, if for any reason our customer doesn't qualify for conventional or FHA, most other banks and lenders don't have any other options, but that's where we love to provide solutions here with our expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs to provide solutions for our borrowers. So with everything else the same, notice we have a new option that pops up with non-QM, and that's the income verification. So full doc is what we call with 2 years tax returns. That's what's required for conventional and FHA. So typically we choose the non-QM option to select one of our alternative doc options. So there's some general options here, but the specific programs, we have asset related programs we do a couple shows on before, have business bank statement programs, we have our DSCR programs we'll go over for investment properties, we have personal bank statements, we have VOEs, we have 1099s, we have P&Ls, all these different ways to calculate income. But our most popular version by far for our non-QM is our personal bank statement 12-month, and that's going to be for our self-employed borrowers. Most of the times, our self-employed borrowers, when they submit 2 years of tax returns, have some various write-offs or other things going on that may not allow them to qualify or may not allow them to qualify for as much money as they would like to qualify and as high of a payment to get the home they want. So in this case, instead of using tax returns, we're simply going to use the last 12 months of bank statements to determine a debt to income ratio without using tax returns, just the cash in the bank statements. So most of our self-employed investors, self-employed borrowers, qualify for much more income where they wouldn't qualify before, or qualify for more income to get that little bigger house or a little bigger loan they're looking for. So these are great solutions for our borrowers. The rates are a little bit higher for these non-QM programs, but these are awesome options if our customer has trouble qualifying. So let's check out the bank statement rates this morning. Wow, looks like they went down a little bit. Great. We love to see downward movement. Non-QM, a little bit late to the party. Yesterday, all the conventional went down. Non-QM, sometimes a little bit late to the party, but this is good. So we have a 7% rate option for 1 discount point in cost and a final APR of 7.080. So that's a great option. Very comparable, just a slight bit more than conventional. Conventional was 6.6 something this morning. Now for just over 7 APR, full all-in cost, we can get our borrowers into a non-QM program. So great solutions here. And there are a ton of different options. Some of these options here of the dozens of options with higher rates may allow things like bankruptcies and foreclosures. So please get with our team. They can find which one of these hundreds of programs will work best for you. Now, before we go into Jose's deep dive, we always want to do a couple live quotes for investment properties. So if we set this to investment property, we'll do our final couple demos, set the LTV to the same amount, 80% loan to value, 20% down payment, and we'll simply compare our conforming conventional investment property options with expanded guidelines. Remember, FHA, VA, USDA are not eligible for investment properties. So we'll click over to conforming conventional. Everything else is going to stay the same as all of our other demos. All we've changed here is investment property occupancy. So let's check out the conventional rates for investment properties. So the conventional programs, unfortunately, they've added some additional adjustments for investments, so we don't have any 1 discount point cost options. The best APR option the computer found was a 7% rate for 3.5 discount points and costs and a final APR of 7.26. So great option here for our borrowers that qualify for conventional. However, most of our investors that are looking for investment properties would like to save cash out of pocket. So they would like a option with less discount points and don't mind going up in rate typically as long as the property cash flows. So if we go down here to maybe a little bit higher rate, there are some options at a little bit higher rate for less discount points. These are actually portfolio options. But I would definitely recommend that our investors compare conventional to our non-QM options. And hopefully we see some downward movement today as well. So for our final demo, we'll set up the same exact scenario, investment property, and this time we'll do expanded guidelines, aka non-QM, where we have all of our alternative income options. So first we select our income option for our investment property here, and our most popular option by far is our DSCR, stands for debt service coverage ratio. What that means is we're simply going to use the estimated rental income from the property in order to offset the PITIA of the mortgage expenses. So as long as the rents can cover the mortgage, aka the property cash flows, that is a DSCR ratio of 1.00 or greater. We have a ton of loan programs for that. We also have programs for DSCR ratios under 1.00 where the property doesn't quite cash flow. So there are some options for that as well. For our demo today, I always leave this blank so we can see all our different options. Now for our non-QM investment properties, there's always a prepayment penalty, typically standard. So we always choose 3 years. That's standard for these programs. However, we can choose 0 if we'd like. That will limit our programs and cost more money. And there are some programs that allow 5 years to save us some money, but not all do. So we always choose 3 years to show the most options here. So let's check out our DSCR rates this morning. All right, does look like, I believe this is a little bit better than it was yesterday. 7.375 rate for a DSCR is pretty amazing for 0.975 discount points and costs. So we solved the problem for our investors looking for less discount points, and a final APR of 7.455. So very comparable there to the conventional option that we had, a little bit higher. But remember, DSCR, very easy loan, no income from the borrower required, no employment from the borrower required. We're simply going to use the estimated rental income for the property. So our investors can start 1, 2, 5 loans at a time in order to refinance multiple properties and purchase multiple investment properties. So very flexible loan as long as the cash flow is right. And you'll see a bunch of different options here for different DSCR values and different prepayment penalty amounts and values. So tons of different options here within DSCR. We have hundreds of different flavors of these programs. Please get with our team. They will find the right program for you. If there happens to be a credit event like a foreclosure, there are programs for that. If we happen to have to use short-term rental income in order to qualify, there are some programs for that. So please get with our team. We love to navigate through all these options for you. Now, let me switch my screen and we will get into our deep dive topic for today, which for those of you that joined us earlier, we're going to be talking about 4-unit properties. So on our live demo, I always do 1 unit, keep it nice and simple. However, most of our investors in particular, and even some of our, as Jose likes to say, house hackers that are looking to buy a primary with other units attached that they can rent in order to offset some of their expenses. A 4-unit property is a very popular request, especially with the popularity of what we call house hacking, but people that are trying to be first-time investors but want to use a multi-unit property in order to set themselves up to be a real estate investor in the future. So great options for 4-unit properties. A little bit complicated because it does change all the LTVs and rates and all that stuff. So we don't do that live on the show, but we'll have Jose go into the deep dive here on the different ways our borrowers can purchase a 4-unit property, whether for primary or investment. So if you're ready there, Jose, let's go ahead and have you take it over.
All right. Thank you, everybody, for joining us. Daily Rates Live with the Mortgage Calculator. Yeah, we definitely like house hackers, right? Those house hackers bring us 3, 4, 5, 6 loans at a time, right? Real important stuff when you're speaking with that investor, and all of a sudden they're telling you, well, now that you did such a great job for me, and I tested you, I have 5, 6, 7, 8 other properties that you can get done for me. So, but real important to note that 4-unit properties are treated very differently, and a lot of different options for you. So let me go with the first option for our first time home buyers. Yes, first time home buyers can buy a 4-unit property with only 5% down. They can buy it.
This would be primary, right?
Yes, sir. Primary right here. Yeah, these are primary options. So first time home buyer, 4-unit purchase, 6.625% rate. Uh, Actually giving a $428 lender credit, and you can buy it down all the way to 5.99. Now, when I'm talking about first time home buyer programs here, we're talking about Home Ready and Home Possible, right? So those normally you can go to 97%, but obviously with the 2 to 4 unit, they do put a little bit of an overlay, so extra couple of percent down payment. But what you have to be very aware of is that you have to go to the Home Ready or Home Possible geocoder, right? Input the address of the property they're looking to get to see if the borrower's median, if they are below 80% of the HUD median income for the area. Now there is a waiver on that 80% if the property is in a low to moderate income census tract. If that is the case, then there is no maximum income for the HUD median income, because they're trying to spur economic growth in those lower to moderate income census tracts. So just be aware, Fannie or Freddie will do it, Home Possible, Home Ready geocoder. Check the property out and see what you can structure. But these programs do allow for lower mortgage insurance, as well as lower rates, as well as, in a sense here, mimicking FHA with how they treat 2 to 4 units, for primary residences. Not 96.5, as you can see here in this example, but still 95%. So FHA, 4-unit purchase, 96.5% LTV, 6.125 is going to cost you a little bit, about a quarter point, but you can buy it down all the way to 5% rate. So we compare this, you will see that the first time home buyer option is considerably less expensive than the FHA option. I mean, obviously the rates are going to go FHA a little lower, but depends what your borrower is looking for. Now, VA right here will allow also 4-unit option. Right? We just closed in our office on a 2-unit VA purchase. We were very happy. Always amazing to help our active military and veterans to get a slice of the American pie. So here we are, VA, 7.25% is offering you a lender credit of 1116, and you can buy it down all the way to 5.5%. And I'll remind those of you that VA loans are not subject to mortgage insurance, but they are subject to a funding fee, which is financed into the loan and will be waived if the borrower has at least a 10% or greater service-related disability. So very good option here, 4-unit. And now we have our 4-unit non-QM full doc primary. So obviously not the same type of situation you're seeing, but this is very good option. This is an 85% LTV option. So for a $450,000 purchase, $67,500 plus closing costs gets you in the door. 9.25. Actually, look at all these lender credit options here. The par rate 8.75%, and you can buy it down all the way to 7.625%. And I will let you know that there is never mortgage insurance on this product, on any non-QM product. And now we have a 4-unit non-QM full doc investment, right? So this other one here is primary, right? We're comparing apples to apples with our primaries. But now, if you have that investment property 4-unit, 80%, this is non-QM. Now, keep in mind, agency, you cannot do 80% on a 4-unit property. So, I mean, here, if you're looking at the rates at 80%, our loan here at a higher LTV is going to be most likely at a lower or same rate than the conventional loan will be, investment conventional loan will be, after all of the loan level price adjustments that Fannie or Freddie are going to put on this transaction. So, very good option here. I don't have a DSCR quote option for you, but they are also 80% LTV with a 4-unit property. So again, you'll see many ways to help our house hackers. Totally many ways. I mean, we just consulted a borrower the other day. They were contemplating their first purchase, and obviously we're talking to them about trying to find a 2 to 4 unit property to structure it with one of these low down payment deals, because you only have usually one opportunity to do that house hack. That's going to be the first property that you buy, because once you own a property in your name, if it's a primary residence, it's going to be difficult for you, for example, to go from a single family home or a town home as a primary residence and then state that you're going to buy a 4-unit property as a primary residence and leave the other property as your investment property. Because usually the move is in the direction of more privacy. So you go from a more joint type situation, like a 4-unit property where you're sharing the structure with people, to a townhouse, or it's your own unit, or to a condo, or to a single family home. So keep that in mind when you are advising your future homeowners. Not a bad idea. Try to get at least a 2-unit property.
All right, looks like we have a question here. If you want to pull that up on the screen, Nick.
Yeah, I think Jose already answered it, but the max LTV for VA 4 units, Jose, you pulled it up, didn't you?
Yes, sir. That was one of the examples there. 100%. They give you the full pop.
And no adjustments.
Correct.
It's amazing. All right, well, let's go ahead and wrap it up then. Great options there. If you need more info on that, you can contact one of our loan officers at themortgagecalculator.com. We have over 300 licensed loan officers in 22 states, and we can do business purpose DSCR, which we went over today, in 44 states. Now, we do this show every morning, every weekday at 11 a.m. Eastern, so you can tune in, see how the rates are fluctuating day by day, and then see our deep dive into a different topic every day, just like we did with the 4-unit properties today. So thank you, Jose. Thank you, Nick. Thank you, everyone, for tuning in, and we hope to see you on Monday for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everyone have a good weekend.
Thanks, everybody.